afternoon, everybody. Brett Glover here with Real Life Trading. And I wanted to bring you two stocks that I'm looking at here this week that I have some interest in trading. And one is to the short side and the other one to the long side. So you have some options. And they are both counter trend trades. So I'm looking to get in and get out and run a fairly tight trailing stop. And so we will cover that here shortly. But the first stock that I am looking at is PATH, P-A-T-H. I know this is a stock that ARK has invested in, I believe, in the past. But here's what I'm looking at. So I like to look for confluence when I trade. And looking at PATH, we had our IPO open, traded up. We did cut below the IPO low. And then we had a nice run. And we've been selling off ever since. So just from a brief Elliott wave standpoint, looking for that kind of ABC corrective wave, you have kind of an A, B across, and then C on this gap down here. And so what I've noticed out of this, we have a falling wedge formation, 2 touches on the upper trend line, and 3 touches on the lower trend line. In addition, from this low here to this high, we have our 1272 extension to the downside that aligns perfectly with that lower trend line, combined with an oversold RSI. And then this was an earnings gap, but it is a retest gap. Bearish candle gapping down. And look at the amount of volume on that gap down that came in. Indecision the next day. That volume bar here is the second most in this stock's, albeit short history. That tells me there's a lot of interest here. Followed by an inside day, bit of a bullish engulfing candle here. And gosh, you could almost consider that somewhat of a wicked pair candle, though not exact. I don't know if Jeremy would agree with that, but so I'm looking to take a counter trend trade on this to the upside, targeting this gap fill here. And so what I like to do on something like this when we come down to this type of level is I look for the lowest low candle, which is this one here, because this low did undercut. So this is the lowest low, and I want a close above that level. And so I'm going to mark my entry right there. And if we close above this level tomorrow or in the next couple of days, then I will take this to the long side. And for a stop, I'm going to put my stop right below the lowest low, something like this. And then as far as the target goes, again, we're targeting this gap fill here. I'm going to set my target right about, let's see, the low of this was 62.20. And so I'm going to set my target at 62.15. I don't like to set it exact to the gap fill because I've had plenty of times where it's traded up to it and I've missed it by pennies. I like to set it just a couple of cents below that, hopefully to get filled there. And so this is essentially the setup that I'm looking at. A close above this level, stop here, and then that's going to be my target here. Like I said, the RSI is oversold as well. And then as far as a 2-bar trailing stop goes, what I'm going to do is if I get triggered in on the close tomorrow and we have another profitable day the day after that, I will set my stop, my new stop, to the below the lowest low of those last 2 candles. And I will run that trailing stop as we make our way up to the gap fill here, because it's certainly possible that we gap down, kind of trade up, do something like this, and then roll over. So I don't want to hold it real long. I want to make sure that I protect profits. So that's what I'm looking at on PATH. And then the other one to the short side I'm looking at is Lulu. And what I like about Lulu is we did have a nice earnings gap here the other day. As we know, I like my fibs. And then from this fib low to this fib high, we gapped right up to our 1272 extension, right above that. And granted, it was a gap and go, but in my experience, this 1272 is a pretty common level for algorithms and such to take profits. So we gapped up, traded down, had a bullish indecision day, and then we had an inside hammer yesterday And today we have an inside bearish candle. Bearish inside hammer, another bearish inside candle. So we have a double inside day, which essentially is a little bit of a smaller scale pennant. So a lot of compression in something like this. And so on a setup like this where we have this type of compression, I'm not looking for a close. I'm taking a breakout on this one. And so I'm going to look for a break to the downside. Myself personally, I want to see us break below this hammer wick here. So I'm going to call, let's see, what is the low of this? 418.99. So we can go, I'm just going to go 418.50. See where that brings us. 418.50. Yeah, something like that. So that'll be our entry. And again, that'll be a breakout. And then my stop, I'm going to put right above. Now, there's a couple of ways you can do the stop, depending on how aggressive you want to be. My preference is I like to keep a tighter stop. And so I'm going to keep a stop, something like that. But for me, it's going to be a close above this level, not necessarily price just hitting it, but a close above this level. So I typically use a little bit of a smaller risk unit, so that way I can build some of that, a little bit of that leeway in there. But again, you can keep your stop there. You can put your stop above the hammer. You can put your stop above the candle that triggered both inside candles. So whichever you want to do. And then again, my target's going to be ideally this gap fill here. And so we'll put that in there. And again, this is a counter trend trade because we are playing it to the downside, even though the primary trend on Lulu is bullish. And so again, I'm going to run my 2-bar trailing stop on that. And what that looks like, if I can just do a quick replay, is let's come back to this day. So if we were looking at Lulu, for example, we came up, came down, came up, a little bit of a volume spike, at this, if you want to call it double top resistance. Now let's just say that we said, okay, if we're going to take this counter trend, I'm going to say if I get a close below this, I will take an entry with a stop above this candle. Something like this. And so the next day comes, all right, we got triggered in, nice morning star candle. And so we're going to make our, your target could be wherever, it doesn't matter for this. So then after that, okay, we put in another profitable day to the downside. Since this is counter trend, I run a 2-bar trailing stop. And so the lowest, or the highest high on this one are the last 2 bars, bar number 1, bar number 2. My new stop is going to go right there. And the next day comes, more profit to the downside. These are the last 2 bars. I'm going to go above the highest high of the last 2 bars. Something like that. Doji candle. Next day, I'm going to move my stop. And so because this is counter trend, I like to run a tight stop just in case price reverses. I want to make sure that I'm locking in profits. So that's how I like to run them along the way. And that way you're not taking yourself out early. You can capture the move, but you're protecting profits along the way. So those are the 2 that I'm watching here going into tomorrow. Lulu, again, with the double inside day, targeting the gap fill to the downside. Probably going to be a little bit of a quicker mover because of this compression. And then Path, PATH, looking to take that long to the upside based on the confluence of the following wedge, the 3 touches on the lower trend line, the 1272 extension, the nice volume that we had come in, and the potential to trap some traders on a retest gap. So hopefully you found some value out of this. Appreciate you listening. If you have any questions, certainly reach out to anybody in the room, and happy trading. Thank you.